Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of May the 20th, 2019. Now, to get started this week, we're going to begin where we always do with that all-important US dollar index. Now, the dollar's had quite a good week here over the last week or so with a little bit of progress on the China-US trade, but not a lot, in my respectful opinion. So the dollar still has that safe haven status attached to it, but we're coming up to a major level of verified resistance. That area currently at 98.08. The dollar has struggled at this area for some time. The indicators in VantagePoint right now are saying we're still going a little bit higher here, but we are moving towards an overbought condition. Looking at the RSI, that doesn't mean it can't go higher, but when we look at things right now, once again, we've got our key support level at 97.33, and we have verified resistance at the 98.08 area. So the probability of a failure in the dollar very soon is likely. Now, when we look at this and we apply that same methodology to gold, we can see here very clearly that gold is under a little bit of pressure. Not a lot of pressure here, guys, but a little bit of pressure with that dollar strength. But we've got a verified resistance zone, and that's coming in about 1304. The lower end of the current range that we're dealing with is sitting at about the 1267 area. Now, most of the indicators in VantagePoint are pointing for a little bit more downside here, but a lot of this is based around that US dollar strength. Now, when the dollar starts to give back those gains, money should move back into gold. I suspect that will be probably in the mid part of the week here. But again, we want to watch these signals from VantagePoint to see when the market is going to be turning. Right now, again, the medium term crossing the long to the downside, suggesting there's still, again, a little bit more downside. Now, with the S&P 500, we hear a lot of different rhetoric here from all the different analysts, the different websites, but let's look closer at this, guys. We've got our critical vantage point level right now. We've got a reversal signal here on our medium term crossing our long-term predicted difference, and we have verified support down at this level here. The market came down, kissed that verified support level. That level goes back to, again, if we look at this, to our, that looks like our March 25th low. Then we've come down, kissed that area. Our vantage point medium term crossing our long-term predicted difference warned us that this was probably getting ready to turn. But again, when we look closer at this, we also have this critical vantage point pivot area at 2882. We're failing 2 days in a row, and we're unable to close above that particular area. So when we look at it going into next week, we need to make a clean break, in my respectful opinion, of the 2900 mark to take the pressure off the downside. Now, again, there's very little movement between the US and China. Trump has blinked a little bit, saying that he may not put the additional tariffs on for 6 months, yada, yada, yada. We've heard all this before, but there is very little progress here. So I don't see that anything has changed. Right now, our major swing top here is coming in at 2960, and our major low point right now comes back into this again, this March 25th low. We've come down and retested that area within a few points, only to have a drastic reversal. So we'll be watching this level very closely to begin the week. Now, oil in most cases will follow the equities higher, and that's exactly what's happening. But we can assess here also that we're getting tangled up around this verified resistance at 63.48. So we're looking for a clean break of that area if we have any chance of targeting 66.72, the additional verified resistance. I believe we will get back up to that area as the closer we move to summer driving season. Now, the indicators from VantagePoint are still rather positive on oil, so we could see further upside, but we need the S&P 500 and the global indices moving higher, to be clear. Now, as we come into our major Forex pairs here this week, once again, a lot of range-bound trading. We'll start with our main pair, Euro-US. This is the most actively traded Forex pair. When we look at it right now, we've got strong verified support coming in. This level is absolutely huge at the 111 mark, 111.12. That area continues to hold. Once again, an excellent call from VantagePoint. When you're looking at the proper setup here, the medium term crossing the long-term predicted difference to the downside, we're failing up against this major resistance line, this verified resistance zone as identified in the software. We've got a falling RSI. All of that led to the euro moving lower, but I will point out we are still very much in the same range. So be careful anywhere down, anywhere near 111. If the euro is going to reverse and go higher, that is where the area is going to be. So we're going to watch the neural index and the predicted difference cross. The same thing that put us short is the same thing that will have us go long here, guys. Okay, so we just need to get this thing turning back up. Right now, the major resistance hurdle that we have to clear is the 112.03 area. If we can get above that, then this pair will continue to move higher. But again, a risk on or risk off scenario in the market will determine that. Now, when we look at US Swiss franc, once again here, guys, one of the best, most effective ways to use your VantagePoint software. Again, our medium term crossing our long-term predicted difference to the upside. That's the pink line. Crossing the blue line, we want to use that in conjunction with the neural index and a rising RSI and a rising MACD for that matter too. I'm just simplifying the charts down here today. But what we also have to do is identify major resistance using the VantagePoint pivot areas. Our T-cross long, 101.35. We must break above that, guys, if we have any shot whatsoever of returning back to this critical verified resistance zone in that 102.30 area. Right now, my optimism remains somewhat guarded here. We need stocks moving higher in order for US Swiss franc to move higher, to be very clear. If stocks crash, dollar yen and US Swiss franc are likely going to follow. So watch this watch our verified support level that we're going to hold. But we need to break through 101.35 if we're going to continue to buy this pair. Now, when we look at the British pound US dollar going into next week, obviously Brexit is another major factor. But again, looking at the predictive indicators in VantagePoint, we can see that the medium term, long term predicted difference cross is starting to narrow. The neural index is still red. We're looking for the neural index to turn green and our medium term to cross our long term predicted difference back to the upside. I believe we're within a matter of days of that happening. So when we back this out and we look at this over the 6-month period, we can see major verified support at this low point going back to January 15th. That area, 126.76. I believe that longs could very much work off this particular area. The further we move away from the critical VantagePoint T-cross long at 129.46, the more likely it is we're going to retrace to it here, guys. So again, watch this 129.64, and we're going to keep a very close eye on the medium term crossing the long term predicted difference when it is combined with the neural index. I think we will have a fantastic long trade here, guys. We're just, again, in my respectful opinion only, we are very close to a turning point on this particular pair. Now, if the global stocks start to turn higher and they recover on some of the trade wars, then what we'll have here too is we have a verified support coming in on the dollar yen, essentially about the 109 area, 109.02. Again, our medium term crossing our long term predicted difference, but the market started to rise here, guys, when the neural index went from red to green. Very important that I stress this combination of these indicators with a rising momentum indicator like the RSI. You can see then and only then did the dollar yen rise. Now, right now I will have to also say that this is a corrective move higher. 110.41 is the area we want to watch to start the week. If we can break above 110.41, then chances are the global stock markets are going to reverse and go higher. That's what will send dollar yen higher. However, If the global stock markets continue to move lower, then dollar yen will move towards that 110.41 area, correct to that area, and then turn back down with those global stocks. So remember, all of the Forex traders watching this and your stock traders that are watching this video, it's one of the same trades here, okay? They are very, very highly correlated. Right now, our predicted differences are rising, but still below the zero line. So we still have a bearish tone to this pair while under 110.41, to be very clear. Now, as we go into our main three commodity currencies this week, we are looking at the USCAD now in the VantagePoint live training room and with my own direct clients. We have basically like shooting fish in a barrel here, guys, using these verified resistance zones every time the US-Canadian pair comes up towards the top of the range around the 135 area we've been shorting. So this trade continues to work. It worked again on Friday. Now, some news coming out of Canada that the US has lifted the tariffs on steel and aluminum. That tariff was lifted, to be clear, because Justin Trudeau finally conceded to Trump's request to stop shipping the Chinese steel across the border and masking it as Canadian steel. And that's actually what was happening. The steel was being imported or exported from China into Canada and then basically smuggled across the border under the guise of no duty attached to it. That's been corrected. The tariffs have been listed. This should be a positive for the Canadian dollar. And I will give, regardless of red, green, blue, or your politics, I believe that Trump was correct in putting that tariff, even though I am a Canadian. That was the right thing to do because a lot of that steel was actually not coming from Canada, right? And that was the issue. So when we look at this right now, once again here, guys, understanding how to use these predicted differences in combination with the neural index, again, we can see that the medium term crossing the long predicted difference is turning down. I believe the Canadian dollar is potentially getting ready to strengthen, but be advised that it is a holiday on Monday in Canada, so that is not a true price on Monday. If the US-Canadian pair goes screaming higher on Monday, it's likely to go crashing lower on Tuesday when the Canadian markets return. So just a little bit of advanced warning there that it is Victoria Day and it is a holiday in Canada. So be careful of this, but for now, the range between 135.20 and the lower end of this particular range is 133.80. In my respectful opinion, it is more likely than not we are heading to 133.80 than towards the 136 area. Now, when we look at our other two main commodity currencies, Aussie US across the board is down about 14% against all of its major G7 currencies on the month. The probability that the Aussie currency is getting ready to turn higher very soon is very strong. So we know where we had this spike lower that went all the way down to the 66.38 area. I don't feel that we are moving down to 66.38. I believe that the Aussie is pretty much going to start to get exhausted and people will start buying the currency back very soon. Now, we've moved a long way from the T-cross long, 69.88. The further we move away from it, the more likely it is we're going to retrace to it, guys. So we're going to continue to watch this area. Right now, we're closing the week at 68.64. Just be very, very cautious because, again, when we come back out, and we look at this on a year-over-year basis, we do have some, the additional support is not down to 66, but again, I think it's a little overdone on the month. I would say the same thing for New Zealand here, guys. It's in a strong downward move, but it's been in this move for a very long time, since March the 27th. So a corrective move, if nothing else, is likely going to be in the cards very soon. To begin the week, our verified zone, the low point of that is coming in at 65.20. We're closing the week basically right on that level. So if this thing is going to turn higher, it's going to be within the first couple of days of next week. So also watch for some opportunity there, because after we made this low, our medium term crossing our long term predicted difference has taken place, and that is warning us potentially of this pair reversing higher also. So the only major event risk that we really have coming up next week is the FOMC minutes. I don't see a lot of variation from the norm coming out of those minutes. So it should be a fairly decent week just based around supply and demand only. So with that said, this is the Forex Weekly Outlook for the week of May the 20th, 2019.